Most people think if the bank says no, the deal's dead. But local lenders see things differently. Today, we're diving into the unusual lending scenarios that can still get funded so you can get your little slice of Idaho heaven. Hey, if this is your first time to the channel, be sure to hit that subscribe button and tap the notifications bell so you can stay up to date on all of our latest content. Our real estate team gets calls, texts, and emails every single day from people like you trying to learn more about North Idaho. So if you guys are thinking about making the move right now or 12 months from now, give us a call, text, or email. Let's get that conversation started. All right, hey, we are sitting down with Ivan and Raena from CrossCountry Mortgage, Team Pinchuk. Wait, what's the other name? Is it like Team CDA?
Team CDA.
Team CDA, I like it.
The real Team CDA.
Yeah. We're going to talk about some of the off-the-wall lending situations because we get a lot of people looking to move to Idaho, and they're like, I've got 3 goats and a chicken that I want to trade for a down payment on a house. Can I do that?
Or eggs.
Or eggs, right? Eggs are a big deal right now. So, no, you can't do that. I don't think. Maybe Raena will tell me different. But we've got a bunch of different things we're going to go through today, things that you guys have been seeing on the lending side. So if you're thinking about making that move and you don't quite know how to make it happen, there's still hope out there. So stick around. We got lots of great information for you guys. The first one we're going to hit on, and this one is near and dear to our hearts, being former first responders. You guys have a line of duty death benefit for first responders. Can you break that down a little bit, what that looks like?
Go ahead, babe.
You can take it.
Take it.
Take it and run.
Send it, Ivan.
So, line of duty benefit, death benefit. You know, the great thing about it, obviously, a lot of our friends are either current first responders or ex-first responders. So, and unfortunately, sometimes those first responders don't get a chance to come home, right? Then the great thing about this program is it helps the families out. And if someone dies in a line of duty while they're an active, first responder, we will cover their mortgage. Their mortgage will get paid off up to $525,000.
That is huge.
That's amazing.
Isn't it crazy?
Yeah, that's really cool. I mean, it's not cool, obviously, what gets you there, but that having that benefit. And obviously, that means you need to have your mortgage through them. It doesn't just count for any mortgage. So keep that in mind. But that's a huge benefit from CrossCountry Mortgage that you guys can do that.
Yeah, and the beautiful part about it, as long as your mortgage, to your point exactly, as long as the mortgage is with CrossCountry, or we call it CCM, you get the benefits of that. So God forbid you get killed in a line of duty, at least your family will be taken care of. They don't have to sell the house.
So is that any loan program, or when do they have to sign up for that when they get the loan? Like, is that a specific one?
Yeah. So once they go through the financing process, as long as them or their spouse, whoever's on the loan, is active, is an active first responder, part-time or full-time employee, then we fill out a form and add it into their closing package. And it's almost like an added insurance policy on their house, which is really cool.
That's exactly really cool. What I picture it in my mind. Mm-hmm. That is literally like having an insurance policy.
Yeah.
And a cool thing about it, too, it's there's obviously guidelines and caveats. So if anyone has a question, we'll be happy to go through all of them so we don't bore you guys now. But
I'm all for it.
Raena would love this.
How many hours do we have?
We definitely don't have enough time for all that. But the cool thing about it, too, it is available for volunteer as well. So it is available for
like
volunteer
firefighter.
100%. It is available for volunteer firefighters and EMS in general.
Does it cross over to like nurses as well, or hospital staff? Do you guys know?
Not at this time.
Okay.
Yeah, it's going to be law enforcement, firefighters, first responders, or volunteers that are in that type of line of work. Now, say you have someone who is in law enforcement but working at a school district, like a university or a college, that they qualify for that program as well.
Awesome. Mm-hmm. That's awesome.
And then the last thing I'll just add to that, you can do a Fannie Mae, a Freddie, an FHA, a VA. All of those loans will qualify. So if you get a VA loan, you can still.
Squirrel.
She thought of something good.
So it's not, you don't have to go to a specific program, and that's the only program you can use. If you want to take advantage of these benefits, you can do a regular.
Add-on.
That's a perfect way of saying it.
Okay.
It's truly an add-on. Again, Fannie Mae, Freddie, VA, FHA. So it opens up the door for a lot of our first responders.
Cool.
That's
Great
incredible.
program.
Well, and you got to see too, out here where we were living, in the beautiful Pacific Northwest, our demographics are kind of changing. So I would say 4 years ago, we had about 10% of buyers that were in ex-law enforcement military. It's gone up to over a third of the buyers that we see. So as our population in this line of work is increasing, it's pretty cool that we have something available for them.
Is that just because you guys work with us and that's all of our clientele?
Pretty much.
Might be. It might be.
Maybe.
Okay, next up, self-employed, right? This is always a tricky one. How do you guys, what programs do you have for people that are self-employed? Because as we know, when it's tax time, we go see Tommy Tax Guy. It's like the question's always like, hey, are you looking to buy a house this year? Do you want to make it look like you made money or not made money? I'm not doing anything shady here when I say that. That's the reality of it. So how does that work in the lending field? You know what I'm saying?
You put a disclaimer on there, so we're covered. We're good.
This is not financial advice.
Yeah.
Within the law, of course.
As long as you follow the law. Self-employed is great. I mean, with CrossCountry, we definitely have a lot of different products and programs in general, but self-employed, I mean, you name it, we have it. You know, whether you're doing a bank statement, 1 year tax returns, 2 year tax returns, 1 year self-employed. There's so many different avenues, and this is why we always tell people, our clients, our agents, hey, if someone says, "Oh, I'm self-employed, I'm not ready yet," it's okay. You don't have to be ready today to buy a house. But what I tell clients all the time is, if you don't know where you're headed, or you don't have a clear plan, and you haven't spoken with a professional who's going to give you a plan, then you're really just wasting time. It's okay not to be ready today, but you should probably still talk to us. We can at least go over your financials, let you know where you're at today, what you can qualify for, what you can buy, and then if that doesn't fit what you're looking for, we can always draw a plan. And we do work with CPAs and accountants to make sure that if someone wants to take advantage of certain write-offs, they still can, but we got to make sure they have enough to qualify for a loan when they're ready.
Okay, I have a question on that. So Hudson just turned 18, and he has...
That's wild.
So, yeah, I know. It's totally wild. But he has the savings just from a big chunk of money that he has. But he doesn't have a job, and he's probably going to be self-employed moving forward, like whatever. So what is he looking at? Like, when can he start getting a loan? Like, if he gets an LLC this summer and starts whatever his self-employed thing he's going to do, what does it look like for him to buy a house?
You know, in general, the rule of thumb is to be in some sort of line of work for at least 2 years, but there are workarounds with that, right? So say you have Hudson, he's going to school, and he's going to be going to school for a certain type of industry that he wants to get into and then start his career. It's just creating a plan. Like, what does that look like? I would say at least a year if he's going to be self-employed, so we can kind of have some sort of track history on how much income he's going to be making. But before we even start there, you don't want to discourage him from wanting to try and figure out a plan today, right?
Right.
We got to start it from ground zero. Okay, what are your goals? What's the short-term goal? What's the long-term goal? What type of work or industry is he going to get into? Is he going to have any sort of contracts in place with the type of work that he's going to be doing self-employed? Because you could even be self-employed today, but if you have maybe you're a contractor and you already have jobs lined up, and we can already see what your projected income will be in the next couple months, 3-6 months. Well, maybe we don't have to wait a full year or 2 years. Maybe they had a trade school, that they were doing. But I mean,
so the point is they need to get in contact with you guys and then be like, this is what it looks like, and you can help with a plan.
Yeah, just to get them started, and so Hudson knows exactly what to expect, what steps to take as he's moving forward in his life.
Yeah, and it's funny because for him, that's like what his whole setup's been for the last few years. Is like, as soon as I can, I'm going to start investing in real estate, and so that's where his mind is. Like, even now, he's like, okay, so I'm thinking about doing this for right now for the summer or whatever, and he's in his mind thinking like he has to continue something for 2 years, right, to get that to qualify or whatever. So he really just needs to.
Something to add to that. It's not necessarily you have to wait 2 years in the same job to be able to qualify. I mean, on the flip side too, right? He's got really rich parents who do really well in real estate. So I wonder where he got the idea to invest in real estate. But co-signers is always a good option, right? There's so many different options. You can do co-signers. We can look at bank statements. We can look at DSCR.
Oh, investment property.
Where you can
That's
look
a good one.
especially if he doesn't need to move out or doesn't want to move out right away, but he wants to start investing in real estate. DSCR, which stands for debt service cover ratio, we can talk to him and kind of give him different plans. Like, hey, if we do it this way, strictly investment, here's what we're looking at. Here's where we have to get to. If you want to buy and maybe buy a duplex and live in one and rent another one out, we can show him a plan for that. If it's truly, hey, I just want to buy my first house that I can move into myself. There's different plans and different ways. But I would say anyone that tells someone you have to wait 2 years and that's your only option, you probably should get a second opinion and truly explore other options. A lot of people are stuck, I feel like, in the old days where this is the way to do it, and if you don't hit that mark here, sorry, you gotta wait. But now in 2026, I mean, the programs are just there. We truly are trying to help people buy and buy now.
Yeah, and I love that that's an option these days. And I feel like a lot of people, like even when I don't talk to anybody anymore for real estate, but I hear people that they talk to and they don't want to talk to the lender. Like they're like, like they're so hesitant to reach out to you guys because I'm not ready yet. Like that feels like a commitment. And I think that's the biggest thing to get through to people is that it isn't a commitment and it's actually going to benefit you if you sit down and talk to them, even if you are 2 years out in your mind, just to get a plan.
100%.
Yeah.
Yeah, because sometimes that, like paying off debt or what's the best strategy for that, that's not my world. I don't know. So
that's my favorite thing to do.
See, that's perfect. Like people need to hear that.
It's like a puzzle, right?
Yeah.
Every situation's different. Everyone's life cycle is different. You've got people just starting out in their careers. They're having families. They're separating from their family. There's deaths in the family. Like at any milestone in your life, having the proper guidance and someone there to support you along the way, especially on the finance journey with home financing, it's like, oh man, that's my jam right there. Tell me your story so I can figure out how we can best serve you, whether it's through home financing or somewhere else,
Very cool.
Yeah,
And I think you brought up a perfect point, Seth.
I did.
A lot of people, I know it's surprising that I even said that, but
Wow.
a lot of people always think, oh, I just have to have no bills. If I can pay everything off, then I can buy a house. And I think it's like the biggest myth and the biggest issue that we run into. People go, oh, I just paid off this $20,000. I'm like, why? Well, because I want to buy a house. I'm like, but your minimum payment was $100. With that $20,000, we could have covered your closing costs. We could have helped you buy down the rate to qualify you and save you a lot more than $100 a month. So it is truly, and we've talked about this before, it's definitely important before you do anything. If that thought of buying a house crosses your mind and you've never done it or it's been a long time or you don't know where to start, well, you start with a lender. Always start with a lender. And to Raina's point, tell us what you're looking for, what's your goal, and we're going to find a way to get you there.
And that's perfect because oftentimes, especially with first-time home buyers, they don't know what their budget's going to be. So we can't go out and find them a home necessarily. We're just shooting in the dark. So to go to you guys, get actual numbers on paper, here's our budget, now we're rolling. Like that's the way to do it. Piggybacking off that, first-time home buyers with limited funds, what options are available for people like that? We get a lot of people, and North Idaho is not cheap. We all know this. So people coming up here, first-time home buyer, hey, I've got $20,000 in the bank. Can they make it happen?
Or $500.
Or $500.
As long as you have $500.
That's all you need nowadays to buy a house, surprisingly.
Wow.
That's crazy.
In Idaho, you only need $500.
Yeah. So, I mean, I tell people you can buy a house with less money out of pocket than buying a car these days. Down payment assistance is a big one. Idaho housing, it's a huge, huge program. One of my favorite programs that I've seen just in the 20 years that I've been in this industry. And then the cool part about, with CCM is we have grants. These grants they're not a second loan. There's no stipulations where you have to keep the house for a certain period of time, or if you sell, you have to pay it back. It's literally free money. Now, of course, there's caveats to it. there's income limitations, so you can't just make $500,000 and still ask for free money. But the grants are great because, I mean, you can get $4,000 now. You know, people think, oh, $4,000 when you're buying a house is not that big of a deal. $4,000 is huge. I can't tell you how many times we're literally just scraping for a client to just come up with enough money, either for closing costs or down payment or to pay something off. So, you know, if someone's putting 3% down on a $400,000 house, that's $12,000. So if we can give someone $4,000 and give them 33% of their down, now they can use that to either pay something off or for the closing costs.
Furniture, moving. I mean,
There's
moving
so
is
many things.
expensive.
Oh, it's super expensive.
Yeah.
Yep.
Appliances, anything. You know, it's $4,000 less out of their pocket.
I'll have you talk about this one with the 6 months prepaid.
Oh, yeah. So first-time home buyers, that's another program.
Someone
loves
loans. Ooh.
I love that this excites you.
You know what? It's like a passion of mine. I don't know why. I'm a bookworm by heart. But yeah, or a nerd.
It's fine.
Yes, I was the person in the front row in school growing up, and I had my notes. I write everything down. First-time home buyers. So to Ivan's point, when they're moving, it gets expensive. The cost is super expensive. You can we have a program at CCM where you can use the credits from sellers to pay the interest on their mortgage payments from 1 to 6 months after they close. So it kind of helps ease them into their monthly and just their budgeting in general, which is awesome.
Yeah.
Yeah.
Wow.
Well, the cool thing about that too is it can definitely help someone that way, but it also, there's plenty of times we run into a situation where we have too much seller credit. And I know buyers will say there's no such thing, but there is.
Use it or lose it, right?
Yeah, use it or lose it. And then in the middle of transaction, we're trying to figure out, can we buy down the rate? Do we do an addendum and lower the purchase price, or do a home warranty? In this case, it's like, hey, how about we just lower your payment for the next 6 months? You know, if someone told me that, I would be very excited about that, that option as well. So it's just one extra avenue to help people out.
My first house, I think I bought it for $67,000.
Reno, Nevada.
Yeah.
Wow.
I was on a tight budget. It was tight. So every dollar counts,
Yeah.
Yep.
My first house was $101,000.
Oh, dang. Yeah. Ballin'.
Yeah. Wow, that's why I married
her. I was like 21. Yeah.
Okay, out-of-state moves. Obviously, we get a lot of clients moving from out of state. Are there things to consider when you're coming from out of state? What are some things you guys see?
Work. You know, what's happening with your job. So just kind of understanding all the nuances of the move. People are ready to move, and they're ready to move tomorrow. But it's, okay, well, you currently have a job in place. What's going to happen with your job? Are you moving with your job? Is it coming with you? Are you transferring locations? You have something lined up? So just kind of, I guess, pre-planning and preparing for that. We do have a lot of clients that are also retiring. So maybe they're downsizing or moving from the western and eastern states. They have a lot of liquidity and equity in their house. So they're paying off their house, they're selling it, and then moving here. So if you're retiring, well, what does that look like? Are you planning on receiving any retirement income? Are you going to be living off of the equity in your house? What's your goal? You know, everyone's situation is different. So we always just like to ask those kind of underlying questions so we can best figure out what's the best course of action.
Yeah. What's the plan for people, or do you have a plan for people that are retiring but they're not collecting their retirement check yet? How do you bridge that gap of, I'm coming from a steady paycheck? Say he's a cop, he's retiring after 30 years. He's getting his paycheck, and now he's going to bridge over to a retirement system. Is there a way to cover that gap so that they can still buy a house?
There's a couple different ways. So at CCM, we have what's called an asset management program. So if they have a lot of equity in their house. So, for example, this cop is going to retire. They have a house that they need to sell. They're going to use the proceeds from the sale to put towards their new home purchase, and they don't have any retirement income lined up as of yet. Well, we can use the equity from the sale of their house, a portion of it for the down payment, and then come up with an income calculation for the remaining funds and use that to qualify them to buy the house.
Okay.
So they don't need to have any sort of direct income coming in, or something set up with retirement in order to still qualify, which is pretty awesome.
Yeah, that's fantastic.
Yeah. Or if, say, they have a retirement, a 401k or an IRA that's set up, and they don't want to touch it, but it's there. They have a lot of liquid funds available just in general. Well, we can get creative and figure out, okay, well, what does that look like too? Are you planning on dipping into those funds after you sell and move? It just depends.
Okay.
And depending on different loan programs as well, they don't have to, we just did a deal with one of your guys' agents in the office where her dad, he hasn't received a single retirement check. He truly hasn't had the retirement set up either, because technically he was still an active police officer. So, but we were able to use that future income. So depending on
the pension.
Yeah.
pension. So there's a lot of, it's funny because when we do these or I talk to someone, it always comes back to talk to a lender. Just talk to a lender, because there's so many different ways, and they bought a very nice house, and it was not a cheap house. And we were able to use his future pension that he hasn't started receiving it, that he technically is still an active police officer, not a retired police officer. So there are ways to go around it. Always go back to talk to the lender, but
just talk to us.
Exactly.
Talk
that's what I was going to say.
the lender.
Because you have to talk to an educated lender, and I'm not trying to knock like Rocket Mortgage or something, but like
I will.
they're not educated, right? They know the basic, like conventional, maybe FHA. I don't know what they do, but you know what I mean? Like even my in-laws, like they're stuck on that because that's who they've always used. So they feel like it's easy, but I'm like, but they're not doing the best for you that they can do.
You got to think they're glorified call centers,
Yeah, exactly.
So there's only so much they're invested in, and they're clocking in 9 to 5 and Monday through Friday. So it might work for someone who's just very basic in their overall work profile. But even then, these people, I can't speak for everyone, right? But what I can speak for is for ourselves. This is our livelihood, and I eat, sleep, breathe mortgage. Same with Ivan. We met in the mortgage industry, and you can tell because this industry is ever changing, and in order to stay on top, you have to educate yourself because programs change every single day, guidelines change every single day. So just kind of staying on top of your craft and truly caring and remembering why we're in this business in the first place, I think speaks volumes.
Yeah, well, I think about like even somebody who maybe could work at CrossCountry Mortgage as well, but if they're not educating themselves on what programs they have, then it's no benefit to the consumer. So to have somebody that is passionate about it and does educate themselves is huge.
I might put you to sleep with a 2-hour educational seminar
you did good
or whatever.
With us. I just we had to do a whole refinance thing, and I just sent everything to Raena. I'm like, I don't care, don't talk to me about it, just figure it out and tell me what to do. I'll listen to you. I don't need to know anything.
I try and adapt to whatever people want. If you want to talk 3 hours mortgage, I'm all for it.
Those are the calls that Raena usually takes.
Yeah, no, thank you. Custom builds. Okay, we get a lot of clients coming up here looking to use NIE Custom Homes to build themselves a beautiful home in North Idaho. You guys do loans on that, construction loans? What's that look like? What if they don't have land yet? How's that play into it?
You just got a VA loan, a $3 million construction, right?
Correct. And that's
$3 million VA loan?
Yes, sir.
Wow.
So, and that, for some viewers will know that we did switch from previous company, Loan Depot, and now we're CrossCountry. And that was one of our biggest reasons, is because Loan Depot didn't have a construction loan. We finally got what we call a broker partner that we can send it to within the last year. The issue with that is the rates, the pricing, just the program in general. It's not very competitive to everyone else that truly does their own construction product. And the beautiful thing with CCM, you know, actually NAE Custom Built referred me a client, and within, you know, one day I sent it up, talked to the SVP of construction for CCM. He looked at it. He's like, this is a solid deal. Let's get it done. Pushing it along. It is a $3 million deal, one-time close VA. So it's awesome.
We service all of them. 100% of our construction loans we service in-house.
Wow.
And post-close, so that client is stuck with us for life.
So the beautiful thing about it, you know, you can own your own land, or you can do a construction loan where you don't own the land, and then we'll land on the land, and on top of that, give you draws to go through and build your dream home. In this case, with this client here, he has the land, it's free and clear. For us on our side of the world, it definitely makes it a lot easier because there's no rush. He doesn't have a rush to get permits and to get the builder plans and everything else. He can take his time with that because he owns the land already. Sometimes it might get a little stressful if you're trying to buy the land and get the permits and do everything else and get the loan. So we always recommend, even for that, is come to us before you find the property you love, before you put that offer on. So we can at least get all the loan approved, the financing portion of it approved. So when you do find the land, you just have to worry about, you know, can you run utilities to it? Can you get permits? How long does that take? But we have multiple different options for construction, one-time close, two-time close. You own the land, you're buying the land. The land's free and clear. You still have a loan. Can we roll it into, you know, if you own the land and you have a land loan on it currently, you can turn around and get a construction loan and roll it all into one. So, again, I can bore you guys to death with every single thing, but, you know, whatever the situation is, we're always going to take a look at it and give the best advice that we can. And if for some reason, which happens very rarely, we don't have a certain product, then we will find that person for you. We do have friends in the industry that we trust, so we'll recommend someone. No one's as good as us, but we'll recommend someone close. You know, I'm just being honest. He said, "Be honest, keeping it real." We always, you know, we'll go above and beyond. Raena is definitely more on the nerdy side. She said in the front of the class, I was definitely the kid in the back of the class.
We can tell.
I know. We had a good time. But
hustling candy bars in the bathroom.
100% hustling candy bars.
Salesman.
Did a salesman all my life. But, you know, even on Mother's Day yesterday, I told her not to do anything and relax, and she was reading guidelines, learning, trying to learn. So we will go above and beyond to find the product. With CCM, the variety or the range of the products we have is so great that I would be surprised if we can't do it. But if we can't, truly can't, then we will find someone.
All right, I got one then. What about off-grid homes?
Oh, yeah, we do them.
You do?
We do.
Flex on them.
Oh, my gosh. Yeah, we do off-grid properties. You've got, oh, my gosh.
Do you know some of the requirements off the top of your head?
There's really not many requirements.
Okay.
Just send us the property address and we take a look and see. Just making sure that it's livable is kind of the biggest point, because a lot of these off-grid properties are legitimately off-grid but also maybe unfinished. So yeah, if you're trying to do like a totally unfinished home that's missing flooring, or, you know, it's just totally naked, bare inside, then we can do that, but it's going to be more renovation route. But if it's fully dialed and ready to go and it's working off of generators, or it's a tree house or a yurt, cool. Bunkers, you know, you see all sorts of stuff.
I think the toughest part with the off-grid would just be the comps. So we do have to comp it out. You can't just be one random off-grid home and there's no other off-grid homes within hundreds of miles. But, you know, North Idaho.
We're in Idaho.
Yeah.
There's a lot of
North Idaho, we shouldn't have the problem with comps. and it does have to be finished, livable, right? And it does have to have water, power,
And
heating
heat.
source.
Yep. Mm-hmm.
Those are the three main ones you're looking at.
Okay, that's fantastic news because I'm going to look at one tomorrow up in Bonners. So,
Of course.
Yeah.
Bonners.
Of course. Have you guys seen an uptick in the last few years of like off the wall things? Is the industry changing? Is it just North Idaho or is it in general?
I would say in general, we call them non-QM loans, but just out of the box scenarios. I mean, it's just through the roof, literally through the roof this last year. I would say over the last 4 years, we had a sprinkle here and there of just kind of unique situations where we had to get creative or find a loan program to fit that client. We've done more out of the box loans year to date than we have the last 4 years combined. So what that tells me is the buyer market is changing, their people's needs or wants are changing, the demographics are changing, and how do we adapt and quickly pivot to find the right programs that are available that are also competitive with good rates, to best suit our clients.
Cool.
Barndominiums are becoming
Barndominiums, shop homes
and barndominiums are becoming pretty popular, especially up here.
Yeah.
And the cool thing is we do have loans for that. So you can build a barndominium, and we're doing it for one of the clients. He's in Lewiston, Idaho. So those are pretty unique because I would tell you, coming from Southern California 4.5 years ago, I've never heard of a word barndominium, but we also lived in the suburbs of LA. So, but I mean, there's definitely some interesting properties, especially up here.
Doomsday prepping homes.
Oh, yeah.
Man.
For sure.
What about interest rates? Somebody's going to ask, what's the deal? Are they coming down? Are we in this for life? What's your professional opinion?
In all honesty, I mean,
roll the dice.
We would have put money on it that the rates were going to come down. What was that, 2 years ago now? Yeah, 2 years ago. And it still hasn't. If anything, they're up higher year to date than where they were a couple months back.
We got to get a Mr. Jerome Powell out there.
I was just going to say, Powell's about to be on his way out. So, I mean, it's a coin flip, right? Either we're going to see a big cut just to kind of show, hey, here's how bad he sucked. He's terrible. I personally don't like him.
Mm-hmm.
Or, they're just going to keep it the way it is. Obviously, the war in Iran is another one. That's spiking our rates up. We did see a little dip right before the war started, but as soon as that happened, the rates went up. So those in the near future, those are going to be the two main factors.
My concern is, and I'm not schooled in this world, so change my mind, but if interest rates came down a considerable amount, it would create a buying frenzy because there's a lot of people sitting on the sidelines, and that buying frenzy would then drive home prices up higher than where they're all at right now, which is already really high. So, I mean, is that the motivation on keeping them where they're at, to avoid
control
pricing?
Mm-hmm, just kind of control the market and the volatility in general. That's my personal opinion.
Yeah. Okay.
Yeah, and there's never a perfect time to buy, right? It's all about affordability in this world right now that we live in. Everything is up and expensive. So our job is really to just figure out what can we do to make a client or make you feel comfortable moving forward and taking that leap, whether rates are in the 6-7 range or they're in the 4s.
Well, no.
6-7?
How dare you?
I know.
I didn't say it.
Well, and the cool thing about that is, like, even if you bought at what you feel like is a higher interest rate right now, is when they do come down, you can always refi them down. So,
and we service most of our loans in-house post-close, so you're stuck with me for life.
And the cool thing about CCM, one, they're big on the servicing aspect, right? So we do keep, I think it's around 98% of all the loans that we fund at CrossCountry. The second cool thing about it is because we are the servicer of the loan, most of the loans will get, there won't be a process in our underwriting or appraisal fee, and you don't have to do a 30-day, close. We're closing these in 2 weeks. So it's a quick turnaround. It's more of a common sense loan because you look at it, you say, okay, they're making the payment, they're on time, everything's good, their job, income, assets are all the same from 2 years ago. Obviously, they can afford a lower payment, right? So we can turn these loans quickly. But the big thing is, I think, it's servicing, because that's a big issue that we have a lot of our clients. They go, well, I don't want to do a loan with you, and then 2 weeks later you send me an email and saying, hey, you're going to Carrington or PHAs or whatever else is out there.
Cool. Good deal. Last thoughts?
Last thoughts. When you
Final thoughts?
Like, I
so
don't do
so
finals.
do you want me to?
Do you have any burning things that you want to tell me?
Yeah, you want me to call your son to get the application started? Are we gonna do a
He
co?
would love that.
Are we gonna do a co-signer? What are we?
That's
what are
probably
we
what we're
thinking?
going to end up doing. We just
Yeah.
got to figure out what we're going to do. Yeah.
Yeah, he's got
That's
he
a
a good
big
he
plan.
graduates in 1 week.
Are you
Next
guys
week.
even ready for him to move?
No.
No, he
I know.
He's like, his idea is to stay living with us and then buy something as an investment.
Investment
He
property.
wants to live
Genius.
with mommy and daddy still. Yeah.
Well, fix and flip, and now you
Yeah.
guys have your custom built
Exactly.
division. Just
Yep.
go and rent them.
That's
Rehab
kind
it.
of what he's thinking,
Mhm.
which
Yeah.
is a good plan for an 18-year-old. I'm stoked
Yep.
about it.
Yeah.
I mean, the fact that he wants to make money and tries to spend less money right now, I think is pretty
As an
impressive.
He's pretty
18-year-old.
smart. Yeah.
18, I was like, how do I get the hell out of my parents' house so I can just go and have fun?
Oh.
Now, at 38, I'm like, God, I wish I didn't have to worry about my bills.
Yeah.
And someone would do my laundry for me.
Thanks
So-
for doing the laundry yesterday.
I got you.
It was Mother's Day.
It's Mother's Day. Don't expect it next week.
Well, thank you guys. Ivan and Raena Pinchuk from CrossCountry Mortgage. If you guys have questions, which I'm sure you do, you can reach out directly to them. Their contact info will be in the show notes, or reach out to me, and I will put you in contact with them. Once again, thank you guys.
Thanks,
Hope that
guys.
Thank you.
Yeah,
Later.
thank you.